Let's try some word association. I say bylaw. What comes to mind? Do you think parking tickets, off-leash dogs, noisy parties? Bylaws cover all these things. But how is a bylaw different from a regular law? Bylaws are rules created by communities or organizations that only apply to themselves. Towns, businesses, and condo corporations can all have their own bylaws. In Canada, there are several different levels of laws. The top two levels are the ones we just call laws. First come federal laws, followed by provincial laws, both coming from the Constitution. Everything below that is called a bylaw because they aren't part of the Constitution. Towns, regional districts, charities, private companies, public companies, condo buildings, and just about any other organization can set bylaws to govern their internal affairs. When it comes to home insurance, though, we're focusing on municipal and condo bylaws. Let's find out why. Municipal bylaws are the type you're probably most familiar with. They're set by cities or towns to govern things like zoning, parking, business licensing, and so on. So what's the connection to home insurance? Mainly building code bylaws. Building codes set the minimum requirements for things like energy efficiency, fire safety, or building height. New buildings must be built to code, as they say, but existing buildings don't usually need to be updated as building codes change. However, if a building is damaged by, say, a fire, the reconstructed building would need to meet current codes. That can increase the price of reconstruction, especially for old buildings with decades of code changes to catch up on. And that's where home insurance comes in. Home insurance covers the cost of rebuilding or repairing a home. If your policy has bylaw coverage, it means it will also cover the extra cost of rebuilding it to code. Most policies have some bylaw coverage. Policies from Square One feature guaranteed building replacement, which means they'll cover the cost of rebuilding it even if it surpasses the coverage limit. That includes bylaw-related increases. Now, the other thing, condo insurance and condo bylaws. If you live in a condo building, you're probably familiar with condo bylaws. Condo bylaws let each property set regulations that cover the condo board structure, meeting processes, building maintenance practices, and how the owners can use their units. Every condo building has its own bylaws, but they don't usually differ much from one to the other. Condo bylaws are related to home insurance. How? These bylaws can create more situations in which the condo corporation can issue loss assessments to owners. A loss assessment is a charge assessed to condo owners to cover deductibles or shortfalls in the property's master insurance policy. Loss assessments and insurance are another thing, which we happen to have a video about. So check it out if you're curious about that particular topic. The other thing condo bylaws can do is require owners to have personal condo insurance policies. But even if they don't require it, condo insurance is still highly recommended. Incidentally, you can get a condo insurance policy or a homeowner's policy with bylaw coverage from Square One. Just visit squareone.ca or click the link on the screen to get a quote. And click subscribe for more weekly new videos. Thank you for watching, and I hope you found this helpful. The other thing. You think I could read? You gotta press play, Darren. Are you gonna press it?